Hello, everybody. It's Socrates and Tyler Jenks from Lucid Investment Strategies on our Hyperwave channel. We haven't been talking too much Hyperwave recently, but we've been talking an awful lot about Bitcoin, crypto, and gold and the stock market. And we are going to do that again today. We see what Bitcoin is doing, but we are going to start with an introduction to our webinar tomorrow, partially so that those that aren't sure what it's going to be about have a better idea. We're not going to spend a lot of time today because we're going to do that tomorrow. We did tell everybody that besides it's $150 for the 3-hour session that's going to be very in-depth. We have done vlogs before, but this summarizes it all. And I think those of you that do not have retirement accounts or have IRAs, Roth IRAs, or self-directed IRAs, or 403Bs, or 457s, or 401Ks, and are not taking advantage of them. That's what Socrates and I are going to be talking about briefly before we get into the charts. And the reason for that, I've made a lot of very sweeping statements in the last year and a half about a number of different things, starting with technical analysis versus fundamental, talking about Hyperwave, talking about Consensio, talking about the Selgin trading system. That has nothing to do with what we're talking about in retirement accounts. I made this statement a year ago in April on one of our vlogs that was entitled, if anybody wants to go back and look, it was entitled The Random Acts of Kindness. That's the title of it, and it's back in April 2018. It's about an hour long, and we go over a lot of the details. The reason I called it that is the government does not do a whole lot for you. Corporations don't do a whole lot for you except pay you. And there's a war going on between employees and employers, and it goes all the way up to the political level. We're going to talk about that in the next 30 minutes. First of all, I'd like to introduce Socrates. Everybody knows him very well. He's got a background in insurance, and actually had his own agency. Most people don't know that. He hasn't really brought it up before, but he went down that route for a while, looking at various products, helping people in various ways protect themselves, save, as well as brokerage things having to do with mutual funds and how to invest, and how to build capital, how to build assets. And most of you don't know that side of his background because you hear all the trading side and the stories about his poker prowess and the stories about his athletic prowess. But it was this other piece that really intrigued me because it centers a person, particularly younger people, and anybody, you know, under 50 years old for me is younger. Anyone that's in their 30s, like my son and Socrates and Leah and Ben Wald and the crew, are kids to me. And I know that they are older than a lot of our listeners, but a lot of our listeners are also in their 40s, 50s, 60s, and 70s, believe it or not. We've got very strange demographics compared to a lot of other people like Tone and a lot of Phil Cohn and the traders, Crown, and even Ivan on Tech, who's only 22 years old. There's a big split in the demographics of the people that have come into the crypto world. And Lee and I stumbled into it at both sides of that spectrum. The very young side that's very excited about crypto offers, and then, you know, old guys like me and ugly old goat who've been doing this for a very long time, and we're trying to share our experience and the mistakes we've made and what we've learned. Hello, Socrates, and thanks for joining us today. Thanks for being a participant in our webinar tomorrow. And what are you looking at today that interests you before we get started on this topic?
Yeah, absolutely. Definitely a very exciting topic today and a very exciting webinar that we have planned for tomorrow. Something that is very pertinent to basically anybody over the age of 18. A lot of times we're talking about very specific things, moving in and out, trading actively, that sort of stuff, and it may not apply to everybody, whereas learning how to get yourself set up properly into a retirement account or more than one is extremely valuable information for basically everybody out there. And you have a wealth of knowledge that you are ready to share with us that I'm very excited to hear about. As you mentioned, I've got a little bit of experience myself. I was an agency owner for one of the largest 403B providers in the United States. I was a registered rep with FINRA for 3 years and did insurance for a few years before that, and have a bit of a unique perspective in that I had the challenge of trying to help people set money aside for retirement when they really didn't have any disposable income. We're talking about K through 12 teachers. Most of them are spending every dollar that they're making. Maybe if they can set aside some money to save for their children's college expenses, and then they're doing great. But most really did not think that they had the ability to set aside money for retirement. So that was really my challenge, was coming in and showing them how important it was to make this an absolute priority, how you could potentially get yourself set up into a retirement account to take advantage of the tax purposes and still have access to that money for things like education or a first-time home purchase. So that was something that I definitely, it was a challenge, but I really enjoyed trying to. It was very rewarding when I was able to help set somebody up into an account where they're making regular contributions that is absolutely going to make a huge difference for them when they're ready to retire. And then also had the challenge of helping them to understand really how much they're going to need to set aside for retirement. For a fourth grade teacher that's making $40,000 a year and has less than $2,000 in savings, like Tyler said, $250,000 is literally all the money in the world to them. But when you sit down and show them how far that would really go in retirement, if they're not trying to work until 80 years of age, and you go through different sort of calculations for how much they're spending, how much supplemental income they'd have, and they realize that $250,000 really isn't that much money at all. And if you're coming to that realization when you're 50 years old, you're really in a very tricky spot. Whereas if I could help people that were closer to my age come to that realization when they're maybe 30, 25, or 35, then they can get the eighth wonder of the world, compound interest, working towards their favor at a young enough age to where they would be able to set aside more money than they really ever realized was going to be possible. So this is definitely a topic that is very close to my heart, something that I have spent a lot of time trying to get the point across to others, and also have spent a lot of time looking into the different ways to help people set aside money when they don't really think they've got any disposable income, going all the way down to helping them budget on a day-to-day basis, just so they can put aside $5 a day into a retirement account. And for somebody that yesterday they didn't think they had any money to put into a retirement account, and tomorrow they know that they can, yes, put aside $5 a day and sacrifice that tall Starbucks coffee or whatever. That to me is extremely rewarding. And what we do on this channel, helping people to learn technical analysis and learning how to trade, that's very rewarding as well. But this is much more important because this is something that if you understand, you can set yourself up for a very comfortable retirement at a relatively young age. I know people at 55 years of age that have never made more than $100,000 that are able to retire comfortably at 55 years of age. And the one concept that I try to hammer home is that it's not about how much money you make, it's about how much money you can save. It literally doesn't matter if you're making $100,000. Take two people. One person's making $100,000 and they're spending 110. Literally every year they're spending more than they're making. We know a lot of people that regardless of how much money they make, they always seem to spend a little bit more. And then you have this other person who is making $50,000 a year and they're setting aside $5,000, $5,500, $6,000 every year. Every year they're maxing out their Roth IRA. Every time the contribution limit goes up, they're increasing that limit. And then when they're ready to retire, they've got 6 figures set aside and they've never made 6 figures in their whole life. They could have 7 figures set aside if they have been diligently setting money aside year after year after year. And then you have the other person who's maybe making $250,000 as a lawyer and they've got $500,000 in debt 20 years down the road. So this is the type of thing that can really determine the quality of life for you and your family, not only for today, but for when you're ready to retire, and then also when you're ready to pass money on to your family. As mentioned, I was also into insurance. I did property and casualty insurance as well as life insurance. And the life insurance and the retirement planning are the two things that can really make or break somebody's financial situation, specifically as it relates to their entire family. Planning and preparing for these things ahead of time is what really separates the people who are going to really be dependent on the government, on the state, on their children, versus the ones who are going to have a very good, comfortable life set up for themselves at retirement. So that was a bit of a rant there that I just wanted to kind of mention a little bit about my background and how important this topic is to me. So definitely really appreciate the opportunity to be on today to talk about that, as well as to be on tomorrow for the webinar. And then before I quit talking, there's just one little comment that I wanted to add. You mentioned how we have people coming into the crypto space from multiple sort of generations. There's a lot of people from my generation, early 30s, late 20s, even earlier, younger than that. Then there are a lot of people of the older generation who really understand the value proposition of Bitcoin. They have understood the problem of fiat currency and they can really sink their teeth into what Bitcoin is all about. So we have those two sort of backgrounds, those two generations coming together into Bitcoin, and it's really a great sort of team from my perspective that we have somebody from your generation that gets to provide the wealth of experience and knowledge that you have from your decades of experience, and then also get to complement that with myself and Leah and now your son to provide a bit of a different perspective. So got a great comment earlier on Twitter that I really enjoyed from Mark_Kryto, who says that recent content has been exceptional. Thank you very much. The Walter White and Jesse Pinkman of trading. So I certainly got a kick out of that. Anybody that watches Breaking Bad, I do myself really like that.
Which is which? Who is who?
I think I've got to be Jesse Pinkman.
Okay, you got it. That was great. That's a great overview. Today, from my perspective, and tomorrow, you're not going to hear me talk the way I normally talk. I'm not going to talk about markets. I'm not going to talk about fundamentals and technicals. I'm not going to be talking about macroeconomics. I'm not going to be talking about any of that stuff. I'm going to be talking about retirement accounts. And I will make you a guarantee if you follow what we tell you tomorrow and do it just the way we tell you, and you're between 18 and 35 years old, I guarantee you will retire as a millionaire off of what we tell you. Now, along the way, you can do things that will prevent you from getting there. That's up to you. You can take the money out of these things. You can do silly things with it in these things. But we're going to try to teach you not to do that. And if you follow what we tell you, you are guaranteed to be a millionaire, and probably a multimillionaire if you're in the lower range of 18 to 35. Even if you are 35 or 40, I will guarantee if you have no money at all, that by the time you are 65 and ready to retire, you will be a millionaire. Now, you've heard that kind of stuff on television and from a lot of other people, and they cannot deliver on that promise. But the mathematics of what we're going to show you ensure that that statement is correct. Now, a little background, forgetting everything you know or have heard from me about hyperwaves and Selgin and Consensio and RSI and stop and reverse points and what's going on with the macroeconomy. My background is working with people and institutions with retirement accounts. I started as a professional money manager not until 1991, and from then on, 95% of the money that I managed were all in pension funds, in a very wide variety of pension funds. And a pension fund is just a retirement fund. That's all it is. I started at the top end where I only dealt with institutions. But what that means is, for example, all the bus drivers in New York. Bus drivers don't make that much money. But they've got what's called collective bargaining, as all unions do. And for 20 years, 17 years, all of my clients were very large unions. And you name the union, and I managed part of their money. The AFL-CIO, the International Brotherhood of Electrical Workers, the Actors Equity League, the American Federation of Musicians, which includes all the actors, everybody on Broadway, all the instrumentalists, all the musical writers, all the singers in the nation are part of those two groups. They're broken down into smaller groups that also have their own unions, but all of the orchestras, all of the operas, as well as all of the blue-collar workers, the iron workers, the sheet metal workers, the marble cutters unions, the roofers, you name it, we manage their money. But let's think of what that means. Those are pots of money, just like if you go to work for 3M or IBM or Intel. There's a pot of money there that used to be called a pension fund. And there's two kinds of pension funds. One kind is called a defined benefit plan, and one is called a defined contribution plan. And almost all of these that I'm talking about that I managed are defined contribution plans, defined benefit plans. What it means is the workers, the bus drivers, the guys that climb up the buildings to do the iron work, the guys that work with sheet metal, the guys that drive milk trucks, the guys in Hollywood that move the booms around, as well as the actors, as well as the directors, as well as the stage designers. Those are people. Those are you and me. And they are working for groups that have promised them when they retire, they will get a pension fund. And you know what that pension fund is going to be and how much they're going to pay you. And almost all big corporations at one time, that's what they offered. Almost none of them do today. And that's been changing for the last 30 years. And we're going to go into why that is, what the difference is, and why now nobody is going to take care of you. A company is not going to take care of you. They're going to give you a 401k, and you're going to have to take care of yourself. If you work for yourself and you don't qualify for a 401k or a 403b like Socrates did, teachers fall into this category of 403b. TIA-CREF handles a lot of that money. 457s have to do with municipal workers. All government employees are used to be in defined benefit programs. When they retired, they would get so much money. My father worked at the American Bar Association, all the lawyers in the United States, headquartered in Chicago, and they had a defined benefit plan. So when he retired, he knew that every month he would get a certain amount of money for the rest of his life. And he also knew that when he died, if my mother was still alive, she would get that money for the rest of her life. That is long behind us. There are nations around the world that still do that. But the US is not one of them. We will be talking about retirement accounts in Europe, in Australia, in South Africa, around the world that have different rules and regulations. But here's why I can make that guarantee that I made for you. If you save money and put it in a brokerage account or a bank or a CD or a savings and loan, you don't fall under what I call this gift that was given to each of us because corporations got to the point they could no longer guarantee pensions. So there was a trade-off. How are we going to take care of people as a government if those people are not going to be taken care of by their corporations, by their municipalities, by their unions, by the federal government, by the military? And the answer was, we will come up with this new thing called ERISA, which basically stands for Employee Retirement Insurance. And it included in it, back in the mid-1970s, this new thing called an IRA. And also this thing called a 401k that didn't catch on very quickly, but quickly has spread to all the major corporations in the US. Many of you have them. They've been offered to you. Many of you started putting money aside in an IRA and then let it lapse, borrowed against it, and there's not much money in it. If you follow our instructions and go out and set up an IRA if you don't have one, have your spouse set up an IRA if they don't have one, or work for a corporation that offers a 401k, and we'll take the 401k as an example. You can put $18,000 a year into a 401k. You can only put anywhere from $5,000 to $6,500 in an IRA. Doesn't matter. whatever is offered to you at the age you're at, if you will max that out, which means don't take the money in your salary and pay taxes on it and then spend it and hope to save some of it, but force yourself to put the maximum amount in, and in many cases, your employer will match what you put in up to a certain level. If they do or they don't, doesn't matter. It's much better if they do, but if they don't, I will still make that guarantee to you. And what that means is for even 15 years, if you were to put $18,000 a year into a 401k, which is the max you can put in, and you can get an 8% return on that per year, which is less than the average if you just bought the S&P 500 index over the last 100 years and just held it, never traded it, didn't do anything with it. There's many other ways that Socrates and I and Leah have been teaching you that you can maximize your return. We're not talking about that today. We're talking about shooting for an 8% return. Not 100, not 200, not 400, not infinity like we do in the crypto world. Not 15 or 20 or 25%, which a lot of hedge funds have tried to do and almost none of them can achieve it. But for periods of time like 8 or 10 years, many of them can hit 14, 15, 17%. Then they'll go through a period of time where they can't. So the 8% number is achievable. We'll show you some ways tomorrow that make it very easy to do that. But then we have to get into some trading things. We will do that tomorrow. If you do that for only 15 years, we'll take you and compare you to someone that does the exact same thing, putting $18,000 a year into a savings account or a bank or a CD or a brokerage account where you just let it sit there or try to trade it. What will happen is if you can get 8% in both cases is after 15 years, you will have approximately $4 million in your retirement account. You will have $1.8 million if you have it in a non-ERISA retirement account, and you've achieved the exact same return and you've put in the exact same amount of money. Well, how is that possible? Well, it's possible for two big reasons. Number one, you get to write off the amount that you put in to your ERISA account. You write it off of your income, so your income tax is lower. You cannot do that if you put your money in a bank or a brokerage account or a CD or a savings account. You have to pay taxes on that. So if you put in $18,000, you get to write $18,000 from your income. If your income is $50,000, that means, and you're in a 30% bracket, you've just saved 30% of $18,000 worth of taxes, which comes out to be something like $4,800, which then compounds into the second year, and the third year, and the fourth year, and the fifth year. And it does not compound in your brokerage account or your banking account or your CD or your savings account. Now, all you have to do is Google compound interest. Before and after taxes, there are a million different sites where you plug in the numbers and you will see what I just said is correct. That's point number one. Point number two is far more important, but not as important as point number three. Point number two is if you make money in your brokerage account or in your savings account, let's say interest rates go up, skyrocketing the way they did back in the 1970s, where you could get 15% in a savings account, and you could actually get 20% for a short period of time in a money market account. Let's just assume that you can get 8%. You're going to pay taxes on that 8%. At 30%, that's 2.4% that you lose. And instead of you really getting 8%, you only get 5.6%. Whereas it's compounded under the ERISA umbrella, under the retirement umbrella. So let's say you're trading in both accounts, and the two people we're talking about make a lot more than 8%. Stock market goes crazy, you go crazy, you make 30%. Well, you've just offset 2.5 years worth of that 8% goal. But in the first case, in the brokerage firm, if you sold those positions, you're going to have short-term capital gains, which are the same as income. You're going to pay full income tax on those short-term gains. If you're not a trader, but you bought things and the market was up 20 some odd percent, so you're up 20% if you're playing with big indexes, you're still going to be on the hook for long-term gains if and when you sell those. If you're doing it with mutual funds, there will be distributions at the end of each year that you will have to pay taxes on, even though you did not sell your mutual funds. And most people don't understand that side of taxation. But what I'm telling you is, I'm giving you the minimal expectations to not only become a millionaire by saving $18,000 a year for 15 years on a compounded 8% basis, but the differential between $1.8 million and $4 million by doing it within this package that's called a retirement account. Number three, and most importantly, you don't pay any taxes until you take money out of a retirement account, as opposed to paying taxes all the way along if you're in any of those other non-retirement account type of accounts. So yes, there's a compounding effect, but the big thing is, at the time you retire, your income by definition is going to have dropped considerably from your earning years. Therefore, you are in a much lower tax bracket, which means you can take the money out of your retirement account as you see fit, when you see fit, when your income tax is as low as you see fit. You are in control of that. You can take all of it out if you want, if you are basically at a very, very low income tax. You must take out a certain amount when you're 17.5 years old, but there's a formula that lets you know ahead of time what that's going to be. If you do the math on all that, you will quickly see that it does not take 50 years to achieve the goals that I'm talking about. You can do it in 15, you can certainly do it in 20, you can do it in 25, you can do it in 30. So look at what your age is, predict what your earnings capacity and how many years you've got to get to that maximum level of earnings. And you can work out your own figures. We will show you a number of places you can do that in our webinar, but we just wanted to give you a brief overview of why these things are so important. There is no gift that you will ever receive from family, from a spouse, from a corporation, from your own trading, from technical or fundamental analysis, that will give you the advantages that I've just listed. That comes from an agreement between all parties about the best way forward to protect individuals' retirement accounts. And they went way overboard in the benefits relative to the disadvantages. There are disadvantages to the retirement accounts, but they are not nearly as big as you think they are. You can get to that money. You can definitely get to that money without paying any penalties. You can take loans that you pay back to yourself with interest. You don't pay it to the IRS. You don't pay it to the Department of Labor. You do not pay it to your corporation. You pay it to yourself. But you can also get it out for college tuition, for medical emergencies, for buying a house without paying penalties on it. There are ways of doing all of those kind of things, and people say, no, I don't want to tie all my money up. You don't have to. You can put money in this year, and if you need it next year, even if it's not for those major emergency situations, you can take it out. You will pay a penalty on it, but if you need the money, you can get to it. And the penalty is more than you would like, but a lot less than not being able to get to that money. You don't want to do that. So if you start doing that, you will do it again and again and again, and then my guarantee goes away. If you don't do it, my guarantee stands rock solid. So that's what we're going to talk about in great detail, the different types, the benefits of each of them, and even the ability that has been debated broadly by me of being able to do crypto in certain types of retirement accounts. But we're going to give you the details on what you can and cannot do and how to do it. So with all of that, we urge any of you to fork over $150, which you can do with a credit card or a debit card or with Bitcoin. And with what Bitcoin has been doing recently, and I think it might be doing for the next several months, you might want to do that. But we'll have Socrates take a look at that for us in just a moment. Go to our website, which is lucidinvestmentstrategies.com. We'll show you at the end of this again. It's very easy. You just go to products, you go to webinar, you go to the retirement webinar, which is tomorrow from 12 o'clock to 3 o'clock. You click on it, and you will get 3 hours of intense information about why what you have been doing is not correct. It is not in your best interest. And the people that listen to the short vlog, many of them have been thanking us and did exactly what we said. And then with any additional money, you can start putting it into brokerage accounts. You can start putting it into savings accounts. But the first thing you want to do is to use these retirement accounts to your benefit. So that's all tomorrow. Socrates, anything else on that you'd like to say?
Was just sharing the screen showing how to register there at lucidinvestmentstrategies.com, and I
Great.
think you did a tremendous job of providing an overview. So yeah, I have had a lot of questions in the chat, definitely a lot of interest. I guess if you could touch on, there are a number of people from the UK wondering, thinking that we have much more beneficial options than they do, and if it would be worth it for them to attend the webinar this weekend.
Absolutely, it would. It absolutely would. Forget the details I just gave you. The numbers are the same. The numbers are the same, even though your tax situations are different depending on your retirement accounts. But in almost every venue I have looked at, and we've got clients in most of those venues, I've explored their retirement accounts, and we can give specific recommendations, not in the webinar tomorrow, but in general about what to look for in your own retirement accounts, about what you can and can't do. Many retirement accounts restrict you into what you can do with the money when it's in there, how often you can make a trade, what kind of things you can get into in the trade. None of that matters. None of that matters. What matters is the mathematics of putting the money away, letting it appreciate in a tax wrapper, and in almost all venues, you are protected from taxes. You might not be able to write them off, but in many venues you can write them off, and we will be more than happy to answer specific questions in specific venues to the best of our ability. But that is not the essence of what we're going to be talking about. We're going to be talking about worldwide why it is important, even if you can't do it under a retirement account package, to put this money away and do not touch it and let it grow, and let it compound. Compounding will take place even if you're paying taxes on it. If you can get 8% but only net 5.6%, take a look at what happens to 5.6% on a compounded basis over a 30 or a 40-year period. And you'll get the same conclusions, just not as quickly as if you get all these benefits from the tax side of things. We'll go over all that tomorrow. So thanks for bringing that up. And I think what we will do now is let's take a look at what's going on with Bitcoin.
Absolutely. Just real quickly before doing that, another good question. Somebody asked if it will be recorded, or if you would have to attend right at the time that we're doing it. And it absolutely will be recorded. You can attend live, and then if you are unable to, it will be recorded. You'll get it sent out, and you can watch it at your convenience. Then even if you do attend live and decide that you want to refer back to it at a later time, that will be available to you. And then also just wanted to mention that there is a link in the description to lucidinvestmentstrategies.com. If you go into the description under the YouTube video, right there at the top, there is a link to the website to make it as easy as possible for everyone. And now we'll be going ahead.
That's a great point. And by the way, Leah does an unbelievable job. It takes hours and hours after the webinars to get it into a position where she can send it out. And believe it or not, she did it literally the same day that we did our last webinar. Everybody that attended got that video. I can't promise that, but it will be very shortly after we end. You will have that. You'll have that for the rest of your life. You can look at it as many times as you want. If you can't attend, or if you can only be there for an hour tomorrow, first hour, last hour, all 3 hours, does not matter. The entire video. Thank you.
Excellent. All right. So taking a look at the price of Bitcoin, it is getting very interesting indeed. And the first thing that I want to take a look at is actually going to be the 50 and the 9 EMA on the 4-hour chart. You guys know that for me, this is one of my most important indicators for determining short-term trend. Will also help me to identify areas of entries and exits. If you remember back in here, I was very much interested in selling basically this candle specifically, had my finger on the trigger and wanted to continue taking profit on my long exposure. And I'm not sure if I was at this point interested in shorting or not, but essentially I did not because this failed to get that crossover. And this is why I use the EMAs to signal entries and exits. They just refuse to make this cross. And when they try to, but are unable to, you usually get a significant response in the opposite direction. And that's exactly what we saw here. Tried to cross over, got very, very close. Right here, it looked like it was going to happen. Didn't, and we got a pretty strong response in the opposite direction from 11,000 all the way up to 13. And now we are basically right here looks like pretty much a mirror image of what we were looking at here, in the sense that when this body was fuller and the price was down in here, then you would have seen these moving averages crossing. But since the candle hadn't closed, you wouldn't be, you would be basically having to wait to see. So seeing these crossing right here, that doesn't mean that they've crossed yet. If this price does reverse and closes up towards the middle, top, or above this area here, then we could see this cross go away. And that is kind of what I mean by they do just refuse to cross. And right here, we are seeing it. If the price does close below probably 11.4, then we will get that crossover almost certainly. But it is still a little too early to say that that's happened, because we could just turn right around from here. And if we do it in a big enough way, then this 9 EMA would start to flatten out, which would cause it to not cross over, and would essentially avoid giving that next sell signal. So this is not one that I'm necessarily interested in taking. I have been selling a lot of spots at the sort of 11,000 price range back in here. And as you've heard me say in the past, I don't really like doing too much in the same range. Like, I really don't know, before really doing anything else, I would want to see confirmation that I'm actually right. I've already essentially taken a big position in the sense that I've sold a lot more spot than I would really like to, in the sense, because I believe I'll be able to buy it back cheaper. So I have already made a pretty big bet by selling a lot of spot up here and taking a lot of profit. So I don't necessarily want to keep selling, even though this could provide a sell signal with this 9 crossing the 50 on the 4-hour chart after creating a lower high. That is a sell signal that I do like taking, but I would pass on it completely here because I've already sold this price. So hopefully that makes sense. If we do break down out of this range and get and flash another sell signal, then potentially I'd be interested. But really, I'm feeling very comfortable with the amount of spot that I have sold and the ratio of fiat to crypto that I am sitting on, at least as it relates to Bitcoin. But this is something to pay very close attention to, see what happens when this candle closes. If we can get this bearish crossover, that would definitely tell me that we should be basically stuck in a distribution range that is nearing the end of that. So yesterday we were in kind of a similar spot on this candle. It was a big red candle all the way down in here. And I had mentioned how it's too early to really say one way or the other, but once this candle closes, we really should have a pretty darn good idea of what's going to happen. If it breaks down and closes below this 50 EMA and closes below my horizontal support at 12,000, then that would really indicate that we should continue on to the downside. But if we can turn around and close back above 12,000, that would be a big sign of strength. It would be a big reversal candle, and it would put us back above the horizontal area of support that I had identified as my crucial area of basically, as long as we're above 12,000, I was expecting most likely that we would continue to the upside. But if we broke down 12,000, then I thought that was really bad, and I did not want to see that happen from a bullish perspective. From my position, I did want to see that happen. So what do we get here? We got that nice close, Dragonfly Doji back above the 50, back above horizontal. And I wrote in one of our Telegram chats that is definitely a very strong close, but we'll need to wait and see if this thing can continue supporting above the 50 EMA. That next candle was very important for me. I wanted to see it come back down to test very briefly under 12 and then get a sharp reaction to the upside. Generally, when I see a Dragonfly Doji, I want it to very shortly test back into this wick area and then demonstrate so much demand in there that it causes a significant reaction to the upside. That's definitely not what happened. And when this candle closed below the 50 and back below, closed below 12,000, that is when I became pretty confident in my bearish position and really started to think that that we are getting a Wyckoff distribution. I don't need to go through and label everything again. For those that have been watching, we've labeled them the last couple days. You can go back to the previous videos if you would like to see. But just real quickly, we see a very nice preliminary supply buying climax on high volume, automatic reaction. Secondary test left a little to be desired, but that's okay. And then we have this signal of weakness breaking down below the horizontal support. And then we rallied back up in here, which this was a very crucial point. And we looked at it yesterday, and I had determined that it needed to fit into a different schematic since this point did not create a new high above the buying climax to give us the up thrust. And since that didn't happen, we took a look at a different schematic, and I really did like that new schematic. It's really adding up, putting point number 7 here, and then waiting for basically a lower high to come in to give us a selling opportunity. I do kind of have to take that back. Somebody sent me a chart on Twitter on the 12-hour, which really showed that potentially the original schematic was still valid. And this is important for a very specific reason that I'll go over. So same thing we're seeing in here, preliminary supply, buying climax, automatic reaction. This is a little bit better for a secondary test. This is definitely not quite as good, but here we do see an up thrust. So we have this high here at 12,920, and this here got up at 12,997. So that is definitely an up thrust. And before I had kind of mentioned that anything back up in this area should not qualify as an up thrust after distribution, since this area didn't create a higher high on the 4-hour. Since it did on the 12-hour, I do basically have to take that back and still keep a close eye on both of those possibilities. I do like how I have it set up on the 4-hour best, and from here would expect to see basically another signal of weakness down in here below 11,000. Lead to a bounce up to about 11,800. This would give us our lower high, which would provide the ideal selling opportunity. And that's kind of what I would expect to see based on the 4-hour. The 12-hour could throw a little, throw another up thrust after distribution up in here before coming down and creating that lower high. So both are possibilities to definitely be aware of and to keep an eye on. And I definitely am seeing this as a Wyckoff pattern. It very much does meet the bill. And at this point, it's just kind of semantics in regards to which schematic we want to use. So seeing this pattern after a massive increase in price is something that is very, very important to me. Furthermore, what's even more important that we have been looking at are these weekly reversal candles. This weekly shooting star is something that has been giving me nightmares, and I'm not even kidding. This thing is disgusting and has really been telling me that I need to be very careful about having long exposure, especially if we break down below 11,000. Again, these high volume reversal candles are basically my number one sign of a short, medium, or long-term correction reversal. These candles are vicious. And we looked at a recent show with Tone Vase, asking him, has he ever even seen something like this? And his whole experience in Bitcoin, has he ever seen something like this? Only thing he could point to was this guy right here, which led to a 100% counter trend move. So that is something that I'm often viewing markets from like as scientific as I can, in the sense that I very much believe in equal and opposite reactions. Right here, we had a huge sell-off, sold off from 19,000 all the way down to 6,000, an enormous move, 300% move. That what caused it to finally reverse and get some sort of move in the other direction? It was this doji right here, this dragonfly doji right here, is what caused that huge 300% move to get 100% counter trend direction. We have never seen another candle like that until a couple weeks ago. And what is it following? It's following a move from 3,200 up to 13,000 or so, even a bigger move than we got here. And what do you know? The wick this is an even bigger wick than we got here. So some sort of big counter trend move off of this this is the shooting star, is very, very much to be expected, and is the single most important technical indicator to me, especially now that we're getting another one that's as an inside bar. Very strong indicators that this thing is exhausted and needs a significant counter trend move to cool off, and that is confirmed with my view of this Wyckoff on the 4-hour chart. So that's what I got. Do you want to share your own chart or anything to mention here, Tyler?
No, that's great stuff. For those of you that have not yet caught Willy Woo and Tone this morning, I would recommend it, because Willie's got some great charts that he brought up. I spent about 45 minutes on the the vlog with them, and I've got a number of questions, and Socrates and I tomorrow before our webinar will spend an hour approximately with Willy Woo, where we'll go into those. Basically, if I understood what he was saying, he's coming to the same conclusion that you are for different reasons, same conclusion that I am for different reasons. I'm looking for a place to buy in the 7,500 to 8,500 area. Willy Woo, and we'll ask him about it tomorrow. So if some of you can get to our vlog before the webinar, that means you've got to spend 4 hours with us. It will be worth it, because his indicators are basically telling him that we're in for about a 3 to 6 month pullback, and he believes it's down to the 8,000 level, which is just about the place I want to be buying. I'm not yet convinced that we're seeing that, but this action in the late day today indicates probably we need to go lower. And I would love to be able to buy down in the low sixes. I think that is sort of off the table for me now. So we're not adding any new positions. We're catching some clients up with others that had held on to their positions ever since the mid sixes. We sold some at 8,800. Some sold all of theirs, and so we're looking for places to start buying up at that 8,500 level again. But we'll take it a day at a time. And I agree that technically things are not looking great there. I also noticed that Litecoin looked like it wanted to break 100. And at one point, we saw Ethereum down dramatically. If you'd like to take a look at either of those.
Absolutely. I think they're both very interesting right now. And I did just want to add kind of my agreements that I was very, very interested in the 63.50 area. But as time goes on, that does have to start to progress to the upside. And that is, for me, going to be based on the moving averages. As time goes on and they continue moving up, then those target entries continue moving up as well. So my low end target for buying back in is the 200 EMA on the daily chart, which is currently down here around 7,026. But that will continue to progress, and it would be just absolutely beautiful if somehow we could get the price to come test that right as it's testing this horizontal at 75. That would be a setup that is would have me licking my chops enough to really enter a large position. So definitely we'll be keeping an eye on that. We'll also, of course, be keeping an eye on the 200 EMA on the 4-hour chart. Look how well that has been acting as support. We were able to buy it back in here. We missed it here, and am not really interested in buying right here based on the analysis from the higher time frames. I said I'm not really interested. I'm not at all. I won't be buying in here, and that's all due to the higher time frames. And again, that's where I'm a little bit different. I usually will be looking at my lower time frames here to see, okay, we've got an entry coming up, and then I'm zooming out to confirm with the higher time frames. Say, well, how does the daily look? Does the daily give me any reason to balk? No, it's okay. Now let's look at the weekly. It's like, holy cow, look at that shooting star. Look at these reversal candles. No way am I going long here. So even if it turns out where I miss a sweet entry because of my analysis on the higher time frames, that's perfectly okay, and it's perfectly acceptable and something to just get used to, in the sense that the higher time frames are going to be good confirmation or denial of the positions that are presented on the shorter time frames. And it's always in your best interest to be waiting for all time frames to line up. At least that is definitely how I view it. So I am, before logging on to the vlog today, I did have my ledger out, and I was sending the remainder of my Litecoin off to sell that. Due to the action that we've seen recently, I did get out of a large majority of the position right at about 116 to 117. That was due to the basically ideal short setup, ideal selling setup, in the sense that we have a 50 and a 200 death cross and a trend line breakdown. For me, that is just like an ideal setup. Always like to see a trend line break in confluence with moving average crossovers. That tells me that this trend line is really breaking and that it's not going to need to be adjusted or anything like that. So this really was just a perfect selling opportunity. I passed on selling here and instead set stop losses here, and then just have a little bit, laying around that just in case. Essentially, I like to keep my profit in crypto when it's a crypto bull market, and I'm taking profit. I like to say sell 80%, and then that remaining 20%, I leave it in that either in Litecoin or Bitcoin or whatever, and that will be the way for me to try to maintain some exposure to the upside while also not really having any risk. So if I hold some without any, like it's at a negative or a zero cost basis, then I'm comfortable kind of holding on and just seeing what happens here. Is this really going to tank, or is it just going to be some real big fake out before a huge breakout? And then once I do get enough reason to believe that this thing is done, then there's no reason for me to keep that 20% in Litecoin. That at that time it's time to go ahead and take my profit in USD. And right here is definitely an area I'm expecting a bounce, and definitely one that I'm going to be selling. So this is kind of a setup that looks like this down move is exhausted, in the sense that you have this first sort of consolidation, and then the second one that's a failed swing move. It doesn't get as far as this one that looks to me like a divergence in the RSI. Let's see, it almost is. I mean, we've got a double bottom in the RSI essentially versus a lower low, so that's about good enough, and this has already taken off and created a new high above this area. So that is definitely showing me signs of just a very short-term correction here based on this RSI that would probably get it back up to about 50, maybe 44, and then what I would be looking for is for this to get back up to the 50 EMA on the 4-hour chart. That is what I expect following this type of action. We got the death cross, we got the breakdown that really separated the price from the EMAs. Let's go ahead, and we are taking a little bit longer today, but there's just too much to talk about. So let's just kind of get a feel for how far it got away from the EMAs. And sure enough, we see that this is as far as it has gotten in a very long time. Since the one time we've had a reading this far away on June 27th, 2019. Since then, we haven't had another reading this far away from the 50 EMA since June 24th, 2018. And we can draw in a level of support, which shows when the price does get this far away from the EMA, it tends to get a counter trend move, which takes it back to that 50 EMA. So that's what we got here. Here, takes us back to the 50 EMA. Here, back there. So that is really what I would be expecting right here. We have come down, we have turned up from support. We've got a divergence on the RSI. If I was really actively trading, that's all that I was doing, is just sitting at my computer trading all day and all night, I would actually be buying here. This is a spot where I would be very confident in a return to the 50 EMA, and that's about 10% away. So that is, it seems kind of crazy to buy here just to sell here as a swing trader, but a 10% move is one that is very significant. And when it could potentially come in a very short amount of time, this is actually a spot where I am expecting a bounce, and therefore I have sent the rest of my Litecoin on over to an exchange, and I'm going to be just probably finger on the trigger to sell this 50 EMA. If I do have to leave or go to sleep or something, the order that I'll set is probably right around 113. I'm expecting the EMA to continue coming down, and then looking at this prior area of horizontal support, 112 to 114 would be the target that I have. And then after that, I would be expecting this to go ahead and break down 100. Get a bounce from here. Just very briefly show what I'm thinking. This is what I would expect. I'm not telling anybody to make any trades off of this. I'm just showing what makes sense to me. And that would be a throwback to retest the 50 EMA, which could potentially come and test this bear trend line that has been established. So out of the stuff that I'm going to be selling, I'll maybe sell 30% of it on a 50 EMA test and hope that it keeps up to 114, 115 and gets to that 200 or this trend line. If it does, then I'll be selling that hard, getting all the way out. So from there, I would definitely be expecting another swing low based on prior swing targets. Let's go ahead and measure that from here to here. That gives us a price and a time target based on how this likes to move. So then we can go ahead and put that down here, which would give us a target of $77 on July 28th. And that would line up very nicely with this channel that we are starting to see develop. So I love Litecoin. I love Ethereum, not because of the underlying fundamentals, but because of how technical they trade. I've never seen anything else in my life trade as technically as Ethereum and Litecoin. They go in these channels, and then as soon as a channel breaks, then it takes off in a channel in the other direction. And that's what we see just pretty much time and time again. And that is what I would be hoping to see here. And potentially even looking to get on the short side if I've got the time or the energy. So that's what I'm looking at with Litecoin. Definitely seeing some very technical setups, and we'll be looking to sell this. Really hoping that we can sell around 110 to 114.
Terrific, great stuff. And if we could just take a quick look at Litecoin Bitcoin and Ethereum Bitcoin, I'm interested if they are holding with the drop in Bitcoin, and it looks like they might be. I just haven't had a chance to look at them today.
Yeah, definitely a good question. It looks like Litecoin's even rallying against Bitcoin today, which is probably off of that rally that it got from about $95 or so.
Right.
So we are getting a death cross on LTC, BTC with the 50 and 200 day EMAs, but that is with the price very extended from them. I would expect a counter trend rally from here. And this is an area where a lot of people don't like moving averages because they're lagging indicators by definition. But for me, that's not a problem at all. And it's something that I have really, thought a lot about, and in the sense that when you do get this action here where this is obviously lagging, this death cross came after this huge sell-off, that's okay. Waiting for that first correction after the death cross when the price is overextended is a tremendous opportunity. Even right here, we can kind of see that price shoots through, gets extended from the golden cross, and doesn't really look back for a while. But then when it does on that first correction that comes back and tests here, look at what an opportunity that was to buy. Even though it didn't create a new local high, it went from 0.014 to 0.017. So that's a very significant move. And even though it didn't continue and create a new high. So right here, kind of the same thing, where if the first correction after this death cross that has occurred with the price extended below it is a tremendous opportunity and something to pay very close attention to. I'm going to go ahead and put in a couple lines there to see if we get some sort of channel, of which we do. And I definitely think that this thing is working on breaking down 0.01. And when it works on breaking down a major area of horizontal support, this is action right here that I'm very used to seeing. And let me try to explain why. So we're just going to put a line at 0.01. That's clearly a really important number for Litecoin, Litecoin BTC. And this is some action that I'm very used to seeing and would expect a bounce from here. So basically, we break down below 0.01 just for a little bit, then we get a bounce, and then it looks like we really break it down, creating a new low below this low and spending some significant time below 0.01. But then it fails to get anywhere. And again, this looks very much like it will be a divergence in the RSI. Let's go ahead and take a look. Sure enough, a beautiful divergence. So this is action that is definitely something that I will be paying close attention to, expecting a bounce, but not expecting it to go anywhere, just basically expecting it to kind of screw around with some people while it works on breaking down a major level. So right here, we create this lower low that looks like it really has broken down this major area, and that should really scare some people into thinking we are going to dump hard and fast. So you get a high volume sell here. Let's go ahead and take a look. Not too high volume, but this is an exchange that that is not necessarily too frequent anymore, just does have a lot of history. But anyway, so breaking down right here, you'd expect a big volume of sellers and then some big whales to get all the fills that they want. They're just there with huge limit orders, take everything that you can get. And then you get this small lower low that happens with a bullish divergence in the RSI. So this is one that I would expect a bounce back up to retest 0.012, and then 0.01 would be very much in danger of breaking down and being the first pullback into these moving averages following a death cross. That's a big signal to me, and one that I would be potentially very interested in taking, and would be targeting that next area of horizontal at 0.0068. So yeah, Litecoin on USD and BTC looks ripe for a small little bounce that will should turn over basically very quickly. That this action should happen very quick, which causes some people to buy right in and get very scared out very quickly. So that's what I'm seeing there. I'll pull up ETH BTC unless you have anything to add.
No, that's great. Thanks.
All right. So before ETH BTC, just showing ETH USD. Again, just pretty nice sort of well-defined trend areas of resistance and support. When those areas get broken, then moves tend to happen. I mean, you can go back all the way through everywhere in this chart that there's been a trend line that's broken. It's led to a significant move in the other direction. And that's what I kind of mean when I talk about ETH and LTC being very technical. These charts are very much the price is being determined by the technical action. I am very much convinced of that. And we're seeing a big move here, breaking down this trend line, breaking down this horizontal. I identified this as my last sort of do or die zone. My key area for ETH USD was about 285. That was matched up with some prior areas of horizontal. Now it looks like we're breaking that down. So keeping a very close eye on this action right here. This is potentially shaping up to be an ideal entry for me. As you heard me mention before, seeing breakdown of a trend line in confluence with crosses of major EMAs is a tremendous sort of signal. So right here, the price is below the EMAs, but they still have a golden cross. So I am viewing this as a bit of a magnet in the sense that, oh, that's a pretty cool, can we do that? No. In the sense that price below, I hope I didn't screw everything up, price below a golden cross will very much attract the price back up to it. As long as these are failing to make a cross, this price is going to have trouble getting too far away from it. It's going to be attracted to these. They're moving averages. This is the average. When you're extended from the average, then it's going to pull it back into it. So this is a setup that I really like to see, which tells me we should potentially get a pull up and into a death cross, which would just be an absolutely awesome selling opportunity because it would retest prior horizontal. It could potentially even throw back as high as into retesting that trend line. I don't think it would because of how hard this is rolled over. But if this price comes back up to 284, and while these are getting a death cross, now all of a sudden this isn't much of a lagging indicator because it's giving you very, very important signals as the price is moving towards you. So this is an ideal setup that I will be paying very close attention to. Definitely don't want to be in any Ethereum spot and would be very interested in shorting this action here. Going ahead to take a look at ETH BTC. This thing is at as crucial of an area as it could possibly be. I am really wanting to say that this thing is done and is gone and is going to just keep going lower, but it's still hanging on by a hair of its chinny chin. And because of that, I have to hang tight and wait on really expecting this thing to dump. So looking at these two green lines, they are my areas of horizontal. This is the do or die zone. If we break down below 0.023, then it's goodbye, and I will have a high confidence target of 0.075, which is based on the prior horizontal and these massive descending triangles. And we are within a whisker of doing that, but this action tells me that it's not going to happen today. This is very similar to what we were looking at before with what looked to me like a divergence in the RSI, where you look like you break down, you get the bounce, and then now it really looks like you're breaking down. But the thing is this one didn't even create a new low. Like this didn't get the real trap where there were big whales waiting to buy right here. That's what I would be thinking is right here is where the trap is going to happen. This is the major area of horizontal. When we try to break down a major area of horizontal, I just see it time and time again where it goes below, comes back above, and then goes below and creates a new extreme point or a new lower low before getting a sharp rally back to the upside, and then it does eventually break it down. So hopefully I'm not getting too into the weeds, but this is even stronger because it didn't break down this low, and instead it's got basically like a double bottom or a higher low, and now it's forming a Bill Williams fractal with this low in between two higher lows on either side. And this action to me really looks as though it should be continuing up to retest 0.025 and really whipsaw some people who are trying to time this breakout. So this is one that it's on the verge of breaking down, but it's too early for me to say that it's going to happen. And furthermore, I think that it could get a bounce from here based on this action, and that is something that is slightly scary because when this thing does bounce from this do or die zone, it bounces hard. So let's just take a look at back here. We've got this green horizontal, and I will wrap this up as soon as possible, but this is the action I was just describing. So you break down below it just briefly, then you get the bounce, and then now you come break it down, and let's pull up the RSI. So you break it down, and you get an RSI div as it appears like you're breaking down a major boundary. So here it comes down very briefly, gets this bounce, which makes you think, yes, it held, and now we're going to skyrocket. And then it comes back, takes out everybody's stop loss. Everybody puts their stop loss right here. That gets taken out. Whales get filled as much as they want right in here. And it looks like you're breaking down, but really this thing is exhausted. You're getting a bull divergence, and really a counter trend move is needed or some consolidation before breaking down. So really what you expect is a significant bounce back up to the upside before it winds its way back on down into some action like this. So time and time again, right here, we wick down, bounce, come back down. Don't get that new low, kind of like here. Get a big bounce, and then it comes down. So right here really is primed for a bounce, but it would be nothing more than a great selling opportunity as far as I'm concerned. Every time we bounce from here, we get a lower high, a lower high, a lower high, and eventually this thing is going to get pulled out from under, and there's going to be so much selling pressure from the people that have bought this every time. Every time they keep buying, keep buying, keep buying. Once the rug gets pulled out, which I do think is going to happen, but I am waiting to call for, there will be so much selling pressure from that built up support that it will move hard and fast. But on the other hand, if support does hold, we see what can happen. And this is just a very small example. It can go much harder and much faster off of this area. So time to be paying very, very, very close attention.
Wow, fascinating. It's like watching a great movie. Terrific. Thank you very much. We were going to take a look at the stock market, which I understand we closed at 2999.9 on the S&P. It keeps flirting with that $3,000 level. We'll take a look at it tomorrow. Webinar is tomorrow. No, we won't. Yes, we will. We'll take a look at it tomorrow because that'll be Friday's closing. And I'll be very interested in what both gold and the stock market do, as well as the cryptos. But the big thing for us tomorrow is going to be the webinar from 12 until 3. Also, we will be on with Willie Woo tomorrow from 11 till 12. For those of you that would like to, he doesn't come on very often. And his work, along with David and Murad's work, is really unique in the Bitcoin world. And it's always great to be able to talk with him. Socrates got it set up for tomorrow, and I'm really looking forward to it. I hope you'll join us, and I hope you will go to lucidinvestmentstrategies.com and sign up for the webinar for tomorrow. Thank you very much. Thank you, Socrates.
Absolutely. And I do have one last thing to show before signing off, and that is that the new Parabolic SAR indicator is live, and it is available for anybody for free on TradingView. You go click on the indicators icon up here in the top panel, search for Lucid SAR, and you will see that right there. It comes up and looks just like you would expect and you've gotten used to, but it is actually based on the original Wells Wilder calculations, which TradingView admitted to us they had deviated from. They tried to set up a new indicator using the original calculations, and it was also incorrect. So it's great to have one that we know we can verify the code, and for sure it is based on the original calculations. So you can also go, when you search for that, you can click on, it says Casey Bowman. He is the one that developed it. He's from Tonevase's Telegram group, and he's been very instrumental in getting this put together. Without him, we definitely would not have this available. So if you click on his name, then it will take you to a description for the Lucid SAR, which shows direct quotes from the text, the exact formula that's being used, and goes over the exact code that is employed. So definitely go over there, give him an upvote for all of his hard work, and then just start to mess around with it a little bit. Like, take a look at this weekly SAR on Bitcoin, how it got you out up here right below 12,800. This was higher and tighter than TradingView's calculation, even though TradingView used a calculation to keep accelerating it towards the price. We've even got a better exit, and it's not dynamic. It's set in stone as the candle is open. So very, very exciting stuff. We'll definitely do a full vlog to go over exactly what differences were made and why they are so important, and what potentially strategies they can be used for. So that is some very exciting stuff. Thank you again, Casey. And I will be definitely fiddling around with that myself. Any feedback will be greatly appreciated from anybody that goes in and starts using that. So that being said, we'll go ahead and sign off. Big thanks to everybody that took the time to stick with us through another long day of talking your ear off. And we'll look forward to seeing anybody who attends the webinar tomorrow bright and early.
Great. Thank you very much.